Hi, this is Alvin from Dr. Wealth. I want to share about this stock called Kuaishou listed in Hong Kong, and just want to share with you what I think about the stock and why I think that a trading setup might be coming, and it might be a good short-term trading buy for this stock after a very lengthy 1.5 years of a Chinese bear market. So I do think that some of these Chinese stocks, including Kuaishou, is staging a rebound. Disclaimer, pause and read it if you need to. Okay, so when we talk about Kuaishou, definitely we'll talk about DOUYIN, which is the TikTok equivalent in China. So they are all about short videos, and Bilibili is another competitor. And if we compare the daily active users in 2021, obviously DOUYIN is leading by a mile with 710 million daily active users, as compared to Kuaishou is about 308 million. And Bilibili is a lot lesser in that comparison. Okay, so Kuaishou is a number 2, and generally I would prefer to buy a market leader. But in this case, DOUYIN is not listed. The parent company ByteDance is not listed, and which means that the next best alternative is going to be Kuaishou. What's the difference between DOUYIN and Kuaishou? So it is commonly known that DOUYIN is more popular in the tier 1 and 2 cities. You can see the red or the maroon bars belongs to DOUYIN, and then the gray ones belong to Kuaishou. So you can see that for tier 1, tier 2 cities, DOUYIN is in the lead, but in terms of tier 3 and tier 4, Kuaishou has an advantage, right? Maybe not in tier 3 because they look the same, but in tier 4, definitely the leadership is with Kuaishou in this case. So even though they are in short videos, there are some differences, right, in terms of the popularity and where the user base is. And how does Kuaishou make money? They have a 3 main revenue segment, right? So they do have short videos, and they also have live streaming, right? Live streaming has been very popular, especially in China, even for e-commerce. And majority of revenue comes from online marketing services. So they collect advertising fees from advertisers, from brands who want to get exposure, because due to the eyeballs, right, they're actually essentially selling attention to the advertisers. And the second biggest revenue, which used to be the biggest, was live streaming. And this is where influencers, content creators come in and create that kind of content that Kuaishou wants on it, right? So Kuaishou doesn't really produce all this content. It's reliant on the users to create all this content for other users. So they make use of other users to create the content, and of course, whenever the viewers sort of like buy gifts, virtual gifts to these creators to reward them, Kuaishou takes a cut, right? Kuaishou takes a cut from all this revenue, and that's how they generate it. Okay, so they share about half of it to the content creators and half they keep for the company. And lastly, is e-commerce, right? So you can buy products directly on Kuaishou platform, and of course that links to the merchants. The e-commerce platform allows them to sell directly, and that's where online shoppers pay them, and in return Kuaishou gets a cut of that fee as well. All right, so that is how Kuaishou makes money. Majority of it comes from advertising. And this is Kuaishou revenue for the past 5 years. It's only listed in 2021, but managed to find some data prior to their IPO revenue. And it has grown 78% per year in the past 5 years. This is very, very fast growth. And of course, the latest year, the growth rate is not as high. I think it dipped about to about 20+%, which is normal because after you've grown to a certain size, naturally your growth rate will slow down. So it is not something that is super negative, right? It's just part and parcel of the natural order of things. And this is their latest result. We can see their revenue has dropped to about 24% growth. Okay, and this is also on the back of very difficult operating environment, considering that China is clamping down a lot on all these internet companies. So that would be some impact to their revenue, but they still managed to grow 24%. So I believe that once the regulation is off, the revenue should grow at a faster pace, right? But of course, not as fast as what it used to, like doubling kind of revenue in the past when it was smaller. And what not so good about it is that they are still in operating loss. We're not talking about even net profit, right? So they have about 6 billion, okay, 6 billion yuan loss in the 2022 first 3 months of it, right? But even the operations, okay, is not profitable, and that is not a good sign, right? The only saving grace is that at least you compare to the previous year's loss is a lot smaller now, right? Even for its operating loss is smaller too. So there is some improvement, but in this climate where the market is not really favoring loss-making companies, Kuaishou is not in a very good bargaining position. Okay, as when the market was a lot more bullish for these kind of companies in 2020 or 2021. Right, but this is what it looks like. Okay, when we look at their price to sales, which can be used as a valuation metric, right? Because we can't use PE, we can't use a lot of other metrics. It's cash flow negative as well. So a lot of other metrics we can't use. We can use this price to sales, and the average has been around 7.59. Okay, for a short trading period. Okay, it was listed at a very good environment. Multiples were high, but now it has since collapsed, and it has stabilized for quite a long time, right? So although yes, it's not at a minus one standard deviation, but at least it is below the average. Okay, average was about 7.6 times, but now it's about 3.6 times. So it's a more than 50% discount from its average PS in the past 2 years. So we can say that the valuation in that sense is considered cheap. And if you look at some of the price statistics, the highest ever price it went to was $417.80. The lowest was $53.15. You can see there's a very huge drop. And then the IPO price was $115, and now at the time of recording is at 85.60. So if we compare from the highest point to the lowest point, it's a drop of 87%. That's a very big wipeout. Imagine that someone has bought at 417.80 and hold all the way to the lowest point. At one point in time, he was looking at an 87% drawdown in the stock. So that is no small matter. And if we look at the highest price to now, it is still an 80% drop. So that's why I say that the valuation is not expensive, right, in terms of the price of the share price currently for Kuaishou. And it is even trading below its IPO price, 26% of it, right, is below. And lowest to now, there's some recovery, 61%. Okay, so that is a good sign, right, because you do want to see some technical rebound, you do want to see some price strength, okay, in this recovery. And can this continue? Let's look at some of this technical analysis. So the IPO in 2021 went up, right? In fact, the share price doubled, right, on the first day of trading. And after that, it just went downhill all the way because the China regulations started to come in and became very bearish. And then it started to range bound in 2021 August till now. Right, you can see I draw this very tight range. It's been just bouncing up. Yes, there were some periods that it pierced through, but it was well supported. Likewise, it was well resisted in the upper end. So what I drew was around $67 to 104. Okay, it's still a very big range, right, that we're talking about. And that is the overall picture, right? And this consolidation is good in the sense that usually if the price is able to break out, it is a very strong recovery from there. Okay, and this is so-called the accumulation decumulation phase, where the buyer sellers are pretty much even out, right? So those who want to buy those who want to sell have already sold. That's why it doesn't go down that much. Okay, but at the same time there was some buying all the way, and then if the buying overwhelms the sellers, right, if everybody is sell out, the price will start to increase. So that is the psychology behind this technical analysis, right? If we look at some of the stages that we can identify, is a stage 4, right? This is a downtrend stage. Okay, try not to buy in these places because it can go lower and lower. And then this is what we call the stage 1. This is the consolidation phase where it range bound for a long time. The longer it is, the breakout will be stronger. Okay, so it has been range bound for almost a year. So that is pretty long. And if this goes up, okay, that shows us that the rebound is here. And we zoom in into this picture, right? So these are the two ranges that we're talking about just now, right? And I want to introduce you to some of these other additional lines. So this is a 200-day moving average, and this is a 100-day moving average, right? So is it time to buy right now? It is still too early. Okay, some of you might be very tempted to buy at $67 and then you want to sell at 104 with rebound. It's also a possible trade because if you place a stop loss just below this line, you lose a little bit, but you potentially can gain a lot more. So that is one way to trade it. But now you can see that it has already recovered quite a fair bit, right? We counted there was about 60+% recovery from the bottom. And it is still considered early in my view because you do want a more confirmed kind of movement, especially breaking out of this very long consolidation phase, right? So what are the signals that I want to see? First, I want the 200-day moving average start to point up, okay? And then this 100-day start to cross over, right? For this to happen, the price will have to go up higher. Okay, and likely it can pierce through this, and that's a good sign because it goes through the resistance. And usually if this continue, right, if this continue, it will pull back a little bit, and maybe at a good nexus point would be this resistance and one of the moving average, which should be the 100-day moving average, and the price touches it. Okay, that would be a very good entry point. Right, so it's actually crossed $100. Okay, so some of you might be wondering, why don't you buy $85 if you think that it's going to go up? Because sometimes the share price can break down. Okay, the pattern may not realize itself, right? May not manifest. So you do want some price confirmation. Don't worry about buying at a higher price, but you want to buy at a more confirmed price. If you look at it at $100, right, it is still very, very below the high of about $400 when it comes to looking at this very, very short history, right? So there's still a lot of upside if we can recover from there. So you just want to be very sure that the sellers have been cleared out and now the bullish trend has established itself, right? So I think it's still early, but I just want to share with you this trade idea. You can monitor and see how it goes later. So in conclusion, Kuaishou was one of the casualties in the China stock crash, right, due to the regulations and unfriendliness towards the tech companies, and Kuaishou is definitely one of them. And price had fallen significantly from the high of $400 to below IPO price now, right, to $80. You're talking about 80% decline. Right, that is considering that the stock has already recovered 60+% from the low. It is still down 80%. So that gives you some idea that it's actually quite cheap. And company is growing but not profitable and cash flow negative, right? So the non-profitability and the cash flow negativity are not good signs, okay? But because this is just a short trade, we are not looking at this Kuaishou for a long-term investment. I do think that that is fine, right? Don't need to be the fundamentally strongest stock. It is good for a recovery play, right? Because if China really recover, the regulations go away, and Kuaishou can be one of the favorite stocks by investors, right? It might get pushed up, and that's where you get your capital gain. And now, technically wise, we can see there are some promise, right? Price seems to be breaking out the consolidation, going above the moving averages, and now it's still early, right? Wait for the signs that I mentioned just now, and if that happens, the rebound probability will increase tremendously. Right, so I hope you like this idea. Do give me a thumbs up for this video, and remember to subscribe to this channel so that you get more trade ideas like this in the future. This is Alvin. I'll see you around. Goodbye.